Have on April 11th, we've got the best of the best in the growing robotics industry up in San Francisco. And there are also copies of the newsletter on your table, which lay out some of the events coming up. And now, on to the program. The topic of tonight's program is investing in China and India, boom or bust. We want to thank and welcome our panelists, David Chow, co-founder and general partner of Dahl Capital Management, Pramod Hockey, managing partner of Norwest Venture Partners, Jack Jia, CEO of Baynote, and Alok Agrawal, the chairman and founder of ValueServe. Our moderator, Kevin Fong, is a longtime venture capitalist and director of the Mayfield Fund. He has a deep and broad interest in semiconductors. An interesting personal fact he shared is he actually just learned how to weld. So evidently there are all sorts of skills one needs if you're going to invest in China and India that I was unaware of. And so with that, I'm going to hand things over to him, and he can introduce the rest of the panel.
Thank you very much. You guys want to come up? Thank you, and good evening. So I have a surprise for the four people that are coming up. We arranged a barbershop quartet number to start the evening up, and we have the harmonies perfectly aligned, so you guys can start off. You're going to sing the Mayfield song. I'm Kevin Fong, as said, I'm managing director at Mayfield Fund. I've been in the venture business since 1988, so 19 years. I was kidding Pramod because he and I, of course, have worked together before and known each other a long time. He has in his bio that he's worked at Norwest for 15 years, and I said, didn't you come in the business the same time I did? Because I tell people I've been in the business 19 years, and he goes, yeah, it's out of date. Plus, he's trying to stay young. But he's not trying to stay young because he keeps on flying to India every 6 weeks. And so what we wanted to do for the panel today, and I'm sure there's varying levels of knowledge about what's happening in China and India. Clearly, everybody's heard the buzz and things like that. And what we tried to do in assembling the panel today is have venture capital perspectives with respect to being an investor on the ground in China and in India, and then entrepreneurial perspectives. And we have two of the people from each of the respective subcontinents that are actively entrepreneurs in the area. This is an extremely distinguished panel, experienced panel, proven entrepreneurs and venture capitalists in the U.S. and in the countries that we're going to be talking about. We're going to try and make this evening as entertaining and as controversial as possible, just to keep you awake and after the dinner and things like that. I'll kick it off with sort of our perspective. At Mayfield Fund, we used to brag about the fact that, for 32 years, when we were talking about it, we were a single office venture capital firm investing in early stage companies in high tech, and the famous, within 1 hour of the office, whether that's by car, plane, or train, that was the limits of our things. We hated investing in companies that had more than one site because we figured the management of that site's introduced risk. And, fast forward 10 years, we have a Beijing office. We have unannounced plans to do things in India. We have 2 investments in India. We have 17 investments in China. It is clearly not 1 hour away unless someone is invested in the business SST, which is being developed, as you probably know. I look forward to that. But now we have operations that are clearly in multiple continents. We have companies that are based and started here, outsourced operations in India, manufacturing or outsourced operations in China, and we have the wonderful internet to tie us all together and essentially have a company that operates 24/7. Semiconductor guys here design the chips here. Verification and test happens in India at the graveyard shift, and then come back the next morning, and there you go. Literally, there's some 24-hour a day kind of operations that are happening. From our perspective, there's a reason for this. During the bubble in the 1998-2000 timeframe, a lot of our brethren went out and started operations in Israel and in Europe, and we passed at that point in time for a lot of reasons. And and so often I get the question about so why now for China and why now for India? And hopefully tonight we're going to be able to cover that. And what you're going to find, like exemplified by the entrepreneurs here, that here are people that know about Silicon Valley startups, know about innovation. The countries are ripe for growth. There's China with depending on who you believe, 9 to 11%. GDP growth compared to a U.S. 3 to 4%. India is growing at a similar rate, and so both the will, the markets, and now the capital are there such that it creates the perfect environment for global innovation and global investing. So to reintroduce today's panel, I'll have them talk about their backgrounds because they can talk about sort of the perspectives as it applies to tonight's topic. But on my left is David Chow with DCM Capital. David's, I think, really one of the pioneers in the China and Asia investing, and I think DCM, with his partner Dixon Dahl, had traditionally been known as U.S. investor, but really in the mid 90s, pioneered and was really some of the first pioneers in some cases with arrows in your back, but a lot of successes as well too. And as we started looking at our China opportunity 3 years ago, David's work is one of the works that we study very closely. Sitting next to him is my esteemed venture capitalist and Pramod Haq at Norwest. The last board he and I sat on together was a public company in the enterprise software area, and we were just lamenting about how the enterprise infrastructure area has kind of been dead for the last 6 years, and maybe there's a resurgence. In the meantime, we've kept ourselves busy, and as I mentioned, Pramod's kept himself busy in India. Next to him is Alok Agarwal. Alok is a founder of a very successful outsourcing firm in India, and he will tell you about what it's like to start a company on the ground here. And then next to him is Jack Jia. Jack was a founder and a co-founder and CTO of Interwoven. Excuse me, thank you, and now has started his new company in China. And so I apologize for that, Jack. So David, why don't you talk about what you're doing and sort of your quick view of the world for the first maybe 5 or 7 minutes, and then we'll sort of go into some prepared discussions about questions and kick off the discussion of the panel. But we'll go down the line here and do that.
Sure, I'll just keep it very short. I'm not going to do an intro because you did a wonderful job, and everybody has the bio in front of you, so I don't need to repeat it. I think China's going through a very interesting period of time. Some people, I think the theme of today is bubble or boom. And I think certainly the mid-stage deals today is going through a huge bubble. Mostly because, in the late stage, everybody kind of refers to the public company prices, and so it's kind of easy to figure out what the pre-IPO price ought to be. In the early stage, it's still way too risky, and some of the domestic VCs, which are still, investing based on balance sheet basis, still are not comfortable investing in two guys with a business plan. And so for the early and the late, it's a little bit more sane, but the middle stage of China today is a complete bubble. There's no question that many of them will pop, probably over the next 2-3 years. The only difference between the bubble today in China and the ones that we experienced here in '99 is the capital efficiency of the dollars or the yuan that's in place. I think you're going to see many of these companies that are funded today, even during this mid-stage bubble phase, those monies can last a long time in China. Whereas in '99, if you recall, a company raised $30 million here. It's gone in 6 months because they gave $25 million to an ad agency,